Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, created exclusively for Mortgage News Network. It's brought to you by our friends at PRMG. They're working for your best interest. Exciting week last week with the jobs report, but also some distorted numbers from both mortgage applications as well as initial jobless claims. Caused some confusion in the market. Why? Well, Thanksgiving holiday caused the numbers to be distorted. And although they try to put some seasonal adjustments in there, the fact that when you compare year over year, the numbers didn't match up. Thanksgiving was a week different. So it caused some distortions on the year over year numbers and even on the weekly numbers. So that caused some confusion in the marketplace. But then when the big jobs number came out, this was a really strong number. And it's interesting because it was very different than the ADP number, which came out very disappointing. The jobs number, really strong. A couple of factors on the jobs number. Was expected to be about 180, came in at 260, but about 50,000 of it were returning GM workers from the strike. But still a really good number, positive revisions to the previous month, and the unemployment rate dropped to 3.5%. Now, don't get too excited about that unemployment rate drop because that's taken from a different survey called the Household Survey, and there were only 83,000 jobs created there. Actually, the labor force participation rate shrunk, so less participation means that you could see a drop in the unemployment rate even if you don't have that many jobs created. So just understand why that drop came. Didn't come from the right reasons in this particular case. Earnings, they went up on a weekly basis. Watch the weekly earnings, more important than the hourly earnings, because that's what you actually take home. You can make more per hour, but you can also work less hours. So it's important to see what the weekly earnings are. And that was up 3.1% for the year. Not quite inflationary, but it's an improvement from the high twos, which is where we were. So this is a really strong number, no disputing it. The bond market's reaction was kind of muted, as I said, because the Fed's kind of in a box. And speaking of the Fed, well, in a couple of days, you're going to get a Fed meeting. And again, the Fed's the man in the box right now because they have put themselves there. They said, look, we're not going to cut rates any further. We're not going to be looking to hike rates. So they're on the sidelines. And this is kind of like a rare situation where we're looking at numbers and not saying, oh, what does this do to influence the Fed? Kind of taking themselves, at least for the time being, out of the equation. What will influence the markets this week will be the consumer price index number, at least the bond market, because inflation is very important. Now, inflation's been running a little bit hotter on the consumer price index number. The Fed, they look at something called the PCE, which doesn't take into consideration out-of-pocket medical or put enough emphasis on the cost of a roof over your head. So that's what the way the Fed looks at it, kind of gives them cover to keep rates this low, or quite frankly, to be cutting the last three times that they had taken action. So this is going to be an interesting number because the markets will be concerned if there is inflation. And this number has been running ahead of the Fed's presumed 2% target for a long time. It's been overdue. And if we get good, strong jobs, an increase in wages, do we start to see an increase in inflation, which could which could impact interest rates negatively, meaning that rates would go up, bond pricing, mortgage bond pricing get worse. So we'll have to watch that number carefully when it does come out. Follow the action with us on MBS Highway. But I tell you what, I'm leaning more towards a more conservative stance now, more towards a locking bias due to the fact now that we have done actually some technical damage with the numbers that came out Friday. Even though the initial response was muted, I think you might get some follow-through drift to some worse pricing, depending on what A, the Fed says, and B, what the CPI number comes out this week. Hope you guys have a great one. Talk to you soon. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.
This is Mortgage News Network.